Hey folks, CB3 here with another live update. Today is Friday, January 3rd. We had a great 2024. What's ahead for 2025 in the markets? So much going on around the world. We have a new president coming to office on January 20th. What's that mean for our portfolios? Stay right here. We're going to talk about it. CB3 Live Update begins now. So the stock market had a banner year in 2024, and not just 2024, but 2023. So this is the first time we've had back-to-back annual returns of more than 20% since the late 1990s, more than 30 years. So that is super positive for continued momentum heading into 25. And another one of those reasons is because we have a new president coming to office who is very pro-growth, low on regulations, and wants to see America dominant in the energy sector. So all of that has made us very positive on the stock market this year, maybe more so than at any time since 2016. So what's the expectation? Goldman Sachs is saying about a 10% rise, which is again a little bit above the 9% average. JP Morgan estimating about 12%. Morgan Stanley saying, look, the index could maybe hit 7,400, indicating about a 25% rise from the current level. So the consensus from 15 Wall Street firms that we track here at CB3 Financial is a target of the S&P by 6,600 by the end of the year in 2025, marking an approximate 9% increase over the current levels. I am more in the range of the mid-teens. I don't think we can have as strong a year as we've had these last 2 years, but mid-teens would still be way above the norm and great for us and the U.S. economy. So U.S. economy still on track for a soft landing, meaning that we're going to escape a recession. I've been saying this on CB3 Live, my monthly Thursday night show, for some time now. It looks like a soft landing. Jay Powell has made a bunch of mistakes as the Fed chairman, but this one he really wants to get right because this is his legacy. If he can take us from a 10% annualized inflation rate down to 2 to 2.25, he's going to be a hero. There's no question, and deserves to be. If he can do that without lurching us into 2 negative quarters of GDP, which would be the classic definition of a recession. So what are the key factors that are going to drive us forward in 2025? Artificial intelligence, AI, obviously is expected to remain the significant driver of market growth, and that's because it's permeating every sector of the economy. There are 11 sectors in the S&P 500, and everything from utilities to consumer staples, not just technology, not just medicine, but every sector of the economy is being influenced by the powerful nature and significant contributions of artificial intelligence to the U.S. economy. Interest rates. I think the Fed is going to further cut rates. I think we're only going to see 2, maybe 3, not 4 or 5, but 2 or 3 is still lower than where we are right now. As I mentioned earlier, I think the Trump administration policies are going to be pro-trade, lower taxes, lower regulation. All of that helps the market dynamics. When CEOs see those conditions occurring, it makes them want to hire more, it makes them want to produce more widgets, and I think the U.S. will continue to be the dominant economy in the world. It definitely has been the last 2 years, and I don't see that abating in any way at all. Corporate earnings, I think we're going to see strong growth, way above the mean that we've seen the last 5 years on average. It's hard to beat the last 2 years, but if we can even equal what we've done the last 2 years, then that gap between the Magnificent Seven and the rest of the market is going to narrow, and that's what we want to see. And then finally, small and mid-cap stocks, we really want to see them participate to the same extent as the larger cap stocks. So the overall outlook for 2025, I think, is very positive. Obviously, we're going to be vigilant with your money because we're managing it. You're counting on us not to get too crazy, not to get too enthusiastic. Again, we trade on a systematic approach. So no matter what they're saying in the media, good or bad, we execute our strategy. We may start looking in different places if we see the economy weakening, but we're not going to change our basic overall strategy. Next week, Thursday night, is CB3 Live's January show, and we're going to talk about the 10 strongest stocks in 2024, and many of you will recognize them because they're in your portfolios. We're going to talk about the Asian influence on the economy. We're going to talk about the European influence on our economy and how these 3 huge areas of the world, Americas, Europe, and Asia, are going to play together to see if they're going to be able to compete with what we're doing. We hope it creates a really competitive environment, because that means that companies have to compete to win. And we want to see that. You've heard the things from Donald Trump asking Xi Jinping to come sit with him at the inauguration. Obviously, he turned that down. But you're hearing things like approaching Denmark and trying to buy Greenland, approaching Ottawa and seeing if they want to become part of the United States, approaching Mexico and saying, you either keep your drug traffic out of our country or we're going to come in 20 miles into your country and set up camps there. I mean, some of this is posturing, but all of these statements from the White House have the potential to rock the markets, at least in the short term. And so we are prepared for a higher level of volatility. It's not changing where we place our stops, but it is placing us in a position where we need to be a little more cautious, even as optimistic as we are about the future of this country and performance in the stock market. So that's what I'm seeing now. I hope that's helpful for you. Be sure to be with us Thursday night, January 9th for CB3 Live's January episode. Until then, you guys take care, and we will see you on CB3 Live next week.